Okay, so what about stocks? Going back to stocks, just one thing I want to highlight at 4,600. I mean, when we started the year, we were already saying that stocks are cheap. But right now, just want to say that it's a lot cheaper. Usually I would use a 5-year PE band, but now I'm using a 10-year. And you can see, compared to the past 10 years, we've never been cheaper, the PSEI. So just to put things into context, because I know there are some skeptics, sasabihin nyo, oh, mababa siya, pero yung EPS nyo, bababa rin. Let me just put things into context. Okay, so PSEI, our index is now down 49% from the peak of 9,078. During the global financial crisis in 2008, we bottomed after falling by 56%. So I did the numbers. If we were to fall by 56% from the peak, um, we would have to hit 4,000. So maybe in January, if you said when we were at 7.8, parang it's impossible for the PACI to hit 4,000. Pero as of today, it looks like it is a real possibility, di ba? So it may happen soon if we were to follow the global financial crisis condition, and fall by 56%. Konti na lang, malapit na tayo dyan. Secondly, at the current price, the implied drop in earnings is at least 38%. Okay. And what is 38%? Conservative ba yun or aggressive? My feeling is it is um, quite aggressive in the sense that EPS fell by only 27% during the global financial crisis. So may buffer ka na dito, margin of error. And at the said level, it's the implied EPS of the index is returning to 2010, 2011 level. So I guess you ask yourself the question, once this crisis is over, are we going to be worse off than we were 10 years, 9 to 10 years ago? If you think the answer is yes, then by all means, continue to avoid the market. If you feel like when things normalize, definitely will be better than 9 or 10 years ago, then I think you should actually keep an eye on the market and consider starting to invest. Okay, and yun na nga, 9 times PE, we hit a low of 11 times PE during the global financial crisis. And finally, all stocks now trading below 10-year historical average PEs. So when I was doing the presentation on the market outlook this January, I said like maybe 80% of the stocks were trading below their 10-year historical average PEs. But now, even the likes of SM Prime, URC, yung mga favorites ng mga investors, even BDO, they're all trading below their 10-year historical average PE. So lahat ng stocks mura, lahat ng stocks very tempting at this stage. And why am I, positive, or what is the reason why we shouldn't be too negative? At least first of all, there's no systemic risk. I personally think that the COVID-19 crisis is not as bad as the global financial crisis, because at the time there was massive leverage, which meant a lot of non-performing loans, especially in the US, because people were borrowing a lot of money and using mga all these derivative products, leverage, etc. And that's a problem that takes a very long time to address. And secondly, global central banks are aggressively boosting liquidity. So the first time, I remember in 2008 when, here in the office, we were talking about Ben Bernanke at the time. He was called Helicopter Bernanke because he was just flooding the whole system with a lot of money, and it was unprecedented, uncalled for. We felt like, I think this could be the wrong solution to the problem, because nung time na yon, sanay kami kung may problema, unahan mo na, hayaan mo nang mabankrupt yung mga bangko, and then those rich people with a lot of money would buy them at a very cheap price, tapos na ang problema, di ba? But, um, you know, the Fed did the bailout by boosting liquidity, and now it seems to be what a lot of people are doing, so it's an accepted practice already, and global central banks are doing it. So I think at least that will help companies recover right now. Okay. So that said, what is the strategy for you as an investor? Again, we already said this during January. So I think that you should stay invested. Let's say may hawak ka pa ngayon, tapos nakita mo, grabe, down na naman ng 40% since January. Ano bang gagawin ko? Bebenta ko pa ba to? Parang nakakatakot, ang daming problema. But I'm just saying, given how cheap prices are and the strong likelihood that we'll recover, and, given that the problem is not going to be a long-lived problem, I think we should still stay invested. But at the same time, um, manage your risk, because again, we're just guessing that this will be a short-term problem, but um, it could go down some more. Things could get worse before it gets better, and the markets might not recover as fast, even though conditions are already improving. So, when you buy stocks today, have a long-term perspective. Diversify, don't just buy one stock, buy several stocks, focus on blue chips, because most likely when they go up, when the market goes up, the blue chips will be the ones to go up first. And finally, limit your size to an amount that you can hold on to for a long period of time. Don't buy too much na you're not comfortable with. Okay, so in summary, the ongoing COVID-19 crisis is scary, as things are expected to get worse before they get better, and the economic impact is expected to be severe. However, similar to SARS in 2003, we think there's a strong likelihood that the crisis will be over by July or the second half of the year, creating an opportunity for long-term investors to buy stocks at bargain prices. China and South Korea have already seen the worst after practicing quarantining and massive testing. And governments around the world are slowly practicing these as well. And global central banks are also aggressively boosting liquidity to address possible liquidity problems. Valuations of stocks are pricing in a scenario that is worse than the global financial crisis, even though our current situation is not as bad, at least in our opinion. However, because nobody knows when and at what level the market will bottom, we would like to stress the importance of having a long-term perspective and managing risk through diversification and proper asset allocation. So just some closing thoughts, which I also shared during the market outlook this January. No price is too low for a bear or too high for a bull. So prices are going down right now. Um, you know, I recognize that prices or stocks are cheap, but I don't know if it will become cheaper. Okay. And next, what Warren Buffett has said: be fearful when others are greedy, and greedy when others are fearful. And we know now is the time to be greedy because everybody's afraid. And the stock market is a device for transferring money from the impatient to the patient. So patience is definitely a virtue during these difficult times. So with that, thank you very much, and I'm open to your questions.